And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to another exciting Wealth Within School for Startups stock market update. Of course, as always, we have our guru, Dale Gillham, with us. Dale, it's good to see you again. How are you doing?
I'm fantastic, Jim. I hope your health problems are way behind you and you're fit and fantastic now.
Oh, I'm perfect. They made me bionic from the waist down, Dale.
Yeah, I always, when the successful people, being sick when you're a successful person is always a tough challenge for you because you always want to do so much, but you can't. But it's good to have you back.
Well, thank you. Let's talk about the market. I have been, as you said, sick, so I've been watching a little extra TV. I can't keep up. It's up 700 points one day, and then, down 700 points, and then up 200, up 200, up 200, down 700. It's worse than a yo-yo.
It is, but that's what reporting season does. It really is one of those times of the year. I mean, obviously, there's every quarter there's reporting season where companies do put out their earnings, and I think it's just the industry creates this so they can create more volatility, so they can make more money off everybody else. But it really, I always say to people, it's like a train. You know, if you go to a station and you're only halfway down the line and you're thinking the train's going to go the other way, it keeps momentum going past your train station, and that's really what the market is. And what I mean by that is volatility, like we're seeing now, won't change the direction of the market. The market will continue to do what it was going to do. It's just creating a few bumps on the train line, if that makes sense. So that's what we're seeing right now. But it is interesting, with Trump putting out his announcements on the China trade war and everything else, and it just increases that volatility, which has a lot of people, a lot of investors worrying about the market, but they don't need to worry about it too much. I think it's all right.
All right. So when we talk about this volatility, are we still bullish or bearish right now, Dale?
I'm still bullish on the US markets. If you look at the US markets, they've not done a lot over the last 2 to 4 years. If you look at, there's a big sideways move over the last 2 to 4 years. I think over the last 2 years, the S&P is like up less than 9%. I think it's like 6%. Over 2 years. Now, that's not normal in terms of the market, which is just an easing of that momentum, or a slowing down of the momentum, and so waiting for the metrics to catch up. Obviously, you hear reports that the market's overheated, and that's just because things like earnings are not as keeping up with the share price, or the PE ratios aren't keeping up with the share price. I think that's all changing now, but I do like the US market, and I think there's more to go over the next couple of years.
Well, let's talk specifically about some of the earnings that came in. Overall, were we encouraging, discouraging? What sectors stood out to you?
Look, with the earnings, there's a lot of different reports coming out. Obviously, busy month in August for the US companies, but really, there's a lot of different. A lot of the companies have reported good results, but they really haven't been rewarded in terms of their the results that they've actually got. But as I said, August means reporting season. That means volatility, but volatility is great. Nordstrom's really was a good one over the week because it actually soared after the company released a mixed earnings report that showed weakening sales, but it handily beat Wall Street profit estimates. So its stock rose about 5% in extended trading, and after it also jumped 21%. And that was really interesting. So it's also Refinitiv consensus estimated adjusted earnings per share was 90 cents versus 75% estimated revenue was 3.87 billion, so versus 3.9 billion that was estimated. So again, another good report or over market estimates. Nordstrom actually only closed up 12.84% for the week, so that's a pretty good effort in this market where there's a lot of volatility, as you saw. Now, Lowe's, they surged on Wednesday after the home improvement retailer second quarter earnings beat Wall Street forecast again, and they toppled Home Depot, which I'll talk about in a second, on a same sort of store sales growth in the US. The report really did exceed analyst estimates in earnings and revenue. I mean, Lowe's closed up 13% for the week. Target, this is a little known fact you might not know, Target was started in my hometown in Geelong in Australia. So that's where it came from. So, but it's a huge company.
I thought it
at
was
the moment,
started in Dayton, Ohio by the Dayton Hudson Corporation. Am I
no,
wrong?
it was, yeah, when you go and look at their website, they actually started in Australia. So, but they're huge in the US, and obviously they're huge here in Australia as well. But it's quite interesting when you read their story. But their second quarter earnings report last Wednesday beat every estimate forecast by the Wall Street experts, and that sent its shares to a record high. I mean, its quarterly profit jumped 17%. As its in-store pickup, same-day shipping services successfully got more customers into their stores, and it raised their outlook for the rest of the year. Now, its shares closed up 22.9%, and they're saying retail's dead, and bricks and mortar retail is dead, whereas these companies are doing really, really well.
But
Home Depot, sorry, mate.
Didn't
yeah, mate.
Target have a really bad year with all of the data breach? So their huge 20% jump could be off of a really bad quarter. And I am pretty sure, Dale, that that's my wife that's supporting Target single-handedly. So you should just rename it the Jim Beach Spends His Money Here company.
Yeah. I have the same thing with my wife. Don't you worry about it, mate. She grabs the credit card and she goes and spends. I mean, Target make good product. They really do. They get good product into their store. They got a good returns policy, and they do it. They fit that sort of low to middle end of that road really, really well. And often when you see big jumps in shares, it really is because comes off a back of a bad month or bad year or a bad report or bad quarter, and so you do see that. So when you see stocks jump, I don't necessarily get too excited about it. I'm more like it when stocks start falling away, and you see that. But then you don't want to bottom pick either when stocks are falling out of the bed, and really you want to get good stocks that are rising. And everything I'm seeing right across the reporting season really does augur well for the US market moving forward. I think it does look strong. I mean, even Home Depot, they sort of they didn't really disappoint investors too much, and their fiscal second quarter sales missed the analyst expectations. And the company lowered its sales outlook for the year amidst fear of a trade war and slowing consumer spending. But it really doesn't seem like consumer spending is slowing, and from that point of view. But I mean, Home Depot was it closed up 6.79% for the week, which is still a good week, even on a poor report.
Yes, that's our local company here, and all the local media has been talking about how strong they have done. So I think the local media knew that one a little bit in advance. Dale, let's move on. Other big news in the week was, of course, the inverted yield curve and interest rates. Germany going to negative interest rates. I can't imagine why anyone would do that. Talk to me about this.
Look, the negative yield curve I think gets way overdone, and I think from a point of view of mum and dad investors, they don't really need to get into that sort of stuff. And I see for months and months and months you'll hear about this negative yield curve and what's going to happen with it. It's a very, very slow indicator, if that makes sense. It says something that may happen down in the future with probability. Now, I know with the US market right now it's going to be bullish for a couple of years, but I'm expecting sort of 2022 to 2025, there'll be the next major low in the US market. But up till then, I'm pretty sure it's going to be bullish, and I'm really confident about that. And that sort of matches up with that yield curve. It's sort of like 2 to 4 years down the track, that's when the low's going to happen. But at this point in time, it's like moving the Queen Mary. It's very, very hard to turn a ship around. And right now, I think the market is bullish. I think there's some really good stocks that have got lower prices at the moment that people could be getting into. Some of them we've actually mentioned already that they could be getting into. But at the end of the day, always protect your downside. Let the upside happen with itself. And I always talk to people about it. If you have stop losses on your stocks that you own, let them rise. And then if they start falling, get out of them. But right now, everything's looking good. But interest rates look like they're going to lower them again this year. I know Jerome Powell, from the Fed chairman, indicated they may impose further rate cuts. It is a bit disconcerting that Germany's going to negative rates, but the US hasn't had a rate cut for 10 years until that was at 30th or 31st of July. So that's a pretty good run. And I think hopefully that will stimulate the economy a little bit more. We just got to get President Trump to sort of stop tweeting too much. The market will settle down and it'll be fine again.
All right, we're going to get 25 or 50 basis points.
Look, I think you'd be 25 basis points over the next couple of months. I think the Fed, well, my opinion is the Fed should let the current interest rate drop from the end of July, go on for a couple of months to see what happens, and wait until we see the reports for what's happening in August and possibly into September before they drop another 25 basis points. But if they see some movements, they might not change it. And that's really where we're sitting at the moment, because interest rate cuts take a couple of months to really start taking effect. But again, I still think it looks good for the US economy, and I think there's not too much there. Employment figures aren't too bad in the US, so I think the future looks bright.
All right, let's briefly cover the trade wars. You mentioned Trump's tweets. They had a successful G summit in France over the weekend. It looked like all indications were that was a very constructive, positive international conclave for once. The trade war, though, it really does seem to get worse and worse and worse and worse.
Yeah, I think it's one of those things. I mean, Trump wanted to do well at the G7 because last time he showed up late, left early, and I think if he did the same thing again, he would absolutely peeve off the rest of the world, and he would make be digging a big hole for himself. So he actually obviously performed better. He might have had some people in his ears saying, hey, you need to really concentrate on this. With the trade war with China, as we've discussed before, this has been going on for more than 12 months, and I'm sort of getting sick of the news. They all postulating for positions, but right now China needs the US a little bit more than the US needs China, given the trade between the two countries. And to me, you need to get rid of your overinflated ego and sit down at the table and work this out, because what I'm not sure a lot of people are considering is China will be the world's #1 economy in the not too distant future. They are rising very, very fast, and they will overtake the US in the not too distant future, and they'll be the biggest economy in the world. And at that time, the US is going to need China a hell of a lot more than the other way. And then you've got India coming up behind that. So China will be sitting here watching what the US is doing and saying, well, hang on, eventually we're going to be outperforming and you're going to need us a little bit more. So we need to talk properly. But I do agree that the US has had a bad deal with China over the years, and I think too many US presidents and or governments have bowed down to a little bit with China. So, to me, it's only fair that there's a balance there a little bit, but you can't push too much, I think, at this point in time. But again, you both need each other, so eventually it's going to work its way out. And I think all that's happening now is a lot of volatility in the market because of it. But it will happen.
Yep. Well, it'll be interesting last week of August as always, and we look forward to seeing what happens. Dale, what is your big prediction for the week? Do we have a good week? Do we have a slow week? It seems to me like everyone's going to be on vacation this week and that no one's going to do anything.
Yeah, that would be my guess. I mean, the Dow was down about 1% last, down 9.1% on Friday. I think for the week it was down 4% last week. I think we're going to steady up a little bit and then move up. I don't think there's big down moves for the Dow, but I think it's looking all right. Again, the volatility won't ease for another week or so once the reporting season finishes, but I think from move up to Christmas, it looks good.
All right. We will talk to you next week, my friend. Dale Gillham, everybody from Wealth Within. Fantastic stuff. We will see you next week.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Again, we see reporting season at play with the volatility on the market up, down, as Jim said in the report a little bit earlier. He said 1 minute it's up, next minute it's down. Where the hell is this market actually going? But that's normal for markets when they're in reporting season. The big end of town use the news and reports to push the market around. And it only makes sense too. It's like when you get a company reporting all-time record of profits or big profits, and they tank and you see the market fall away, because when's the best time to sell something? when everybody else wants it. What makes everybody else want it? When they're producing great news. And we've got to remember the big mutual funds or the big funds always are buying stocks with the longer term outlook. So they're buying them when nobody else does want them, and they're selling when everybody else does want them. So they're using that kind of news to sell into it. And it's no wonder they start to fall away. Or you see a company that's got really bad report, but it's better than it's not as bad as what they expect, so the price actually jumps up, and so you see exactly the opposite. And this is really why it's so critical to look at charts rather than look at all the news that's going on around about the reports, because the reports really are just for the industry to have a look at, because that's what they're wanting, all the metrics about what profits they're making, what their expenses are doing, what are their goals, what are they planning for the next quarter. And really, you know, having a report every 3 months or quarterly is really suiting the funds industry rather than the companies. The companies would rather only report twice a year max, not 4 times a year, because why should they need to report 4 times a year? That's one of those strange things that I think really shouldn't be happening, but it's really for that, as I said, the fund managers and everything else, so that they can move the market around and adjust their portfolios a hell of a lot more, and it creates more volatility, and it also creates more stress and angst for investors, because things get jumpy, and really it doesn't need to be like that. And pull back from it. And if you're a bit nervous on the market, just pull back. Don't look at the reports, just look at the stocks. Look at the charts, because the charts will tell you what it's doing, the direction and the strength. As I was saying to Jim, you know, if you're on a train platform, you know, if you're in the middle of a train line and the train comes along, don't get on it expecting the train to go the other way. It's going to go to the end of the line, and then it's going to come back the other way. But if you're at the end of the line, you know it's going the way you want to go. So you need to know whether you're at the middle of the line, the end of the line, the start of the line, and which direction the momentum is going. But that's really why the charts can help you. But let's have a look at the Dow Jones on the screen right now. Looking at the Dow Jones, you can see here the last few weeks, there's that all-time high on a weekly chart back in July at 27,396, and we've had 1, 2, 3 weeks down, 4 weeks down to this low. Last week it was bearish. It tried to drive up here and tried to make a high here. The high was 26,388 before falling away and closing low. And I'll just have a quick look at that daily chart, and you can see what I mean. The big day here on Friday, where there was an 813 point range. Now, a lot of the TV and the news reporting saying the Dow falls this many points and that sort of points. But if you look at from the close the day before to here, it's 2.37%. The Dow moves 2% all of the time. Nothing to be too stressed about. It really does move a couple of percent all of the time. So 1 and 2% is not a big issue. If we're talking about 5 or 6 or 7%, that's a different story. But when they quote different points ranges, it makes it look big. 800 points looks huge. So don't get caught into the whole marketing type of speak that media companies put out to get you to watch their videos or read their newspapers or look at their magazines and articles and everything else. Right now the Dow is going down, and you can see here it has been overall bullish. I still think it looks good. I think right now it is moving down, and if I put a tool on it, you'll see here, I think, you know, the Dow is moving down. It didn't click. I think the Dow is going to be moving somewhere between 25 to 24,000. It'll probably move down into there in the next couple of months, or next month or 2 months. But overall, as I said to Jim, I think this market is bullish, because you can see this big sideways move. You could have been in the market in January 2018, and we're only, how many months? We're just about to move into September, 3 months from January 2020. 3 years later, and you would have been buying at the same price. So the market's been going sideways. That's what I'm saying is I don't think the US market is overheated. I think there's plenty of room for it to move. I do think it's bullish through for the next couple of years to 2022, maybe 2023, and then coming down into 2023 to 25 into the next major low. But right now, nothing to be too worried about at this point in time. So let's go and have a look at the SPX right now, and you can see on the screen here, this is a monthly chart of the S&P 500, and whilst it's a little bit more bullish than the Dow, you can see there the high there of 3027. Again, you know, 2 years ago here, that was January 2018, it's pretty much the same price as what it is today. So whilst it's a little bit more bullish, which is for the lower end of the markets, pushed it through, made a higher high or new all-time high in July there. I still don't think it's going to be too much of an issue with the market coming down. Again, I think it's pretty much only going to come down to, I'll tell you my point. If If I whack my little tool on here, you can see here, oh, I did it again. Let's go. It'll probably stay between 27.67 and 26.87. I think that's the area for support we'll find, and then it'll start moving up. It'll probably be down there in the next 4 to 6 weeks, roughly. It'll be down at those price levels. It will have some rises in between that. It will have at least 1 or 2 weeks rising. You see, last couple of weeks, it's been holding at this point in time. I don't necessarily think it won't have at least 1 more week up before it makes a slow, but right now it's looking good. So let's go and have a look at some of the stocks we mentioned with Jim in the earlier part of the report. So I'll bring those up. Okay, on your screen right now you can see Lowe's as a great stock, and looking at last week's move, you can see that huge big move there on the right hand side of your screen, where at that range of $18.42, closing right up at $1.06 and 39 cents, and importantly breaking through that. Now we may see a bit of an easing this week after that announcement, creating that volatility, but the interesting thing here was really that it stayed above that low there. So that low of 93.28. This one here was 91.82, and this one was 91.60. So that low stayed above it. It's gone bullish. So it'd be interesting. It is a longer term bullish stock. If we look at the monthly chart, this is quite sustainable, so I think this is looking nice. It's been held back a little bit, just like the rest of the market. You can see there January 2018, again, just like the market, like the Dow, a little bit of a resistance around this area, but I think it looks nice. I think this stock will continually move up. And again, as I said with Jim, they say, retail is dead. I don't think it is actually dead. They're saying bricks and mortar are dead, or they've been saying that. I don't think it is. People do like to have an experience when they go shopping. And I know women, not to try and be sexist, I know women love to go out and have that social experience of shopping and what it helps them feel like, having a coffee and a muffin or a biscuit or something like that, and doing some shopping and coming home and giving presents or gifts to their family. They enjoy that. And online you don't get that same enjoyment. You're just pushing some buttons and something shows up with the UPS man or the courier dropping it all off to you, and it's not as exciting doing that. It's a whole experience. But right now I do like Lowe's. Target is another good stock, and you can see there again that huge big move last week, and massive move even though the market has been quite volatile. You can see closing at $103 with a $24 range, starting at 86. So nearly 20% it screened right up. I'd expect again some easing on this stock as well, but another retail stock. I mean, pretty much outside the last one, they're all retail stocks, but this is quite a sustainable move, although I don't think that is. I think we'll come back a little bit to a bit more sustainability in terms of short term. So if we put that little thing there, I think that's sort of the rise that it's going on. So we can probably get a bit of easing over the next month or two, and then moving up. But long term, I think this looks quite nice for a stock to put into your portfolio. It does look really good. Home Depot is also another one that excites me. Have a look at that. It's just a beautiful stock, moving up quite nicely in terms of that, and beautiful stock. I think it's going to keep trending up. It's been a little bit volatile. This is the last month. We've got a $23 range. So it's a 10% range on a $200 stock. But moving back onto that weekly chart, you can see the big move that it made last week. Even though it didn't meet analyst expectations, still had a range of $23 on a $222 stock, or 10% range on that, and closing higher, breaking above that. So it does look quite good at this point in time. So I do like this stock. GE is one of those big stocks that everybody sort of looks at in terms of, it was one of the founders of the Dow, or the Dow Jones that we look at. But look at how bearish this thing has been. Its all-time high is way back here, where we go back in August 2000. Is that August 2000? Yeah, something like that. I think it was Benjamin Franklin that founded this company. So, one of the oldest companies in the US, and it's looking quite sick. But eventually stocks do find support, and they start to rise, especially good companies. And you can see that move right along there, that level there, that sort of $6 to $7 range. And I think that's going to pull this stock up. Now, I don't necessarily think it's going to go below that. Let me just expand this up. What we might see, and often you see after a big downward move, and then you get this sort of what I would call a dead cat bounce over weeks, months, or years. That happens where it comes right back down to test that low again, and we get a nice little dead cat bounce. If this low holds over the next month or two, so if that holds at above 666, and starts to move up, then I would suggest the GE is going to be on a nice move up again, and it could be a really good dark horse to buy, not right now, but in the near future, and only if it stays above that low of $6.66 and starts to move up. And I wouldn't buy it till it breaks through that sort of level there. Now that's a big move between $6 and $10, and people will say to me, well, I'm leaving a lot of money on the table here, Dale, what are you doing to me? So there's 62% leaving it on the table, but there's so much more money to be had above that. So this is the point, don't jump too early. So you can see a lot of money to be had above that if it does move into a new uptrend. So don't jump early, jump a little bit more cautiously and you'll reap rewards, because if you jump early and it turns and goes down and goes below that low, then you're not going to be happy with yourself. So right now, just stick GE on your watch list. If it does find some support, have a good look at it. But if you want me to look at US stocks, please, US stocks, chat box down the bottom there, just put your title in. Hey, can you have a look at this for me? Put some reasons around why you're thinking about that. I would love to have that so I can help you as well. Also, if you've been watching and you love my videos, there's a big red button there that says subscribe, so please hit that and show your support for the channel. I'd love to have you. But for now, good luck, good trading. Take care.